All right. So you should be able to see it now.
Yes.
All right. So moving on to the next session talks about the legal and regulatory framework. So this part is just um, basically talking about the relevant tax laws that we apply when we are doing our CIT, right? And then what are the technical things that you need to know regarding this. So I'll send some materials to the WhatsApp group shortly. They are basically the tax laws that we have in Nigeria, and with a focus on CIT and education tax, right? CIT and education tax. So just give me a minute. Let me forward that to everyone on the call so that we can all follow through as I'm explaining it. Okay, seems it's not loading. Just give me a minute. I want everybody to have the material with them. Be easy to follow. Okay. Please confirm you have received it on the WhatsApp group. I hope everybody on this call is on the WhatsApp group. Somebody should confirm. Lookman, can you confirm that you have received it? Oh, you're not on
Yes,
the
I
WhatsApp
think
group.
I received it.
Oh, okay. All right,
No,
thank
I
you.
am.
Okay. All right. So let me go back to my presentation now. So yeah, under the legal and regulatory framework, we'll be looking at the relevant tax laws that applies, or let me say relevant laws that applies to the preparation of the company income tax. So for this class, we'll be looking at the Company Income Tax Act, right? That is the Company Income Tax Act, CAP C21 LFN 2004, right? As amended by the Finance Act 2019, 2020, 2021, and now 2023, right? So this is like the principal legislation that governs the preparation of the company income tax in Nigeria, and it provides the legal basis for the taxation of the income of companies operating in Nigeria. So the CIT Act is like the major, or let me say the principal act that guides the preparation of our CIT computation. So everybody must have a copy, which I've sent to the group. And So as time goes by, I would request that we open it because I'll also be sharing my screen on those things, on some of the section of the law. So we also have the FIRS, that's the Federal Inland Revenue Service Establishment Act, right? The Federal FIRS Establishment Act is just giving the FIRS the power as the responsible agency, right, to administer and collect taxes in Nigeria, especially company income tax. So while we have different arms of government, different tax agencies relevant to collection of taxes, the FIRS is the one responsible for collecting CIT in Nigeria. So what gave them the power to collect that tax, that is the CIT tax, is the FIRS Establishment Act. So if you need a copy of that, I will also try to share to the WhatsApp group so that we can also see what the powers of the FIRS are with respect to CIT collection. So we also have taxable entities. So because we have different kind of companies in Nigeria, it's important that we also define what taxable entities are. That is, for as I've written it here, under CIT, under CITA rather, companies liable to pay CIT include incorporated entities, whether resident or non-resident, that are engaged in business operation within Nigeria. So this includes both private and public sector, public limited companies. So, and I mentioned that here that I referred to Section 9 and Section 10 of CETA. So I would open the CETA so that we maybe I won't open it yet. I want us to get to the part that everybody will be able to relate with it so that we can all learn from it. So just a second. So FRS establishment that we have talked about, that taxable entities. So um, just to provide more clarity to that taxable entities, only corporate entities are subject to CETA. Only corporate entities are subject to CETA. So private business enterprises, so companies that are registered as business enterprise. For those of us that might not know what business enterprise is, those ones that they write Ade and Sons, Nigeria Enterprise, Tunde Afolayan and Co, chartered accountants, all those kind of categories of business are known as business enterprise, right? They are not corporate entity, and as such, they are not required to prepare their CIT returns. Neither are they required to file CIT returns. So let's take note of that. However, we have other categories of businesses too, like partnership businesses. They are also not required to file their CIT returns. Although they recently the FRS released a circular about 2 months ago saying that limited liability partnerships are to prepare their tax returns just like every other company. But irrespective, the tax law for now still talks about people that are required to prepare their CIT as corporate entities. Corporate entities. So let's take note of that. Now, taxable profit. So even though we have defined it before, just to reinstate it again. So CIT is composed of taxable profit of companies, right? Taxable profits are determined based on profit or loss of their profit or loss account of the company, with certain adjustments and deductions allowed under the law, right? It is, however, important to take note of Section 13 of CETA in determining your taxable profit. So, what does Section 13 of CETA says? As time goes by, would unveil that also. Now, for now, I'm going to go to the next aspect. Well, let me just go to that Section 13 of CETA. Please, can you confirm you can see my screen? Let me stop sharing and share again.
Yes.
Okay, you should be able to see my screen now. Can you see my screen now?
Yes. Okay.
Yes, yes.
All right, thank you. So, what I have here on my screen is basically a tax law, right? And I wanted to just show you guys how to read the tax law, how to understand the tax law before we move into the next section. So, how to read or understand the tax law. When you have a tax law, it has something that they call sections. The section is can be likened to what we call the table of content. Table of content. So the difference is that the section might not have page number
Yes, sir.
in front,
Please let me pass the
but
pen.
okay. So the section might not have like a page reference number, but to have what we call the sections. So we have section 9 talks about charge of tax. If you want to understand what the charge of tax is, you go to section 9. So scroll down and go to section 9. Okay, so somebody is on mute. Section 9, charge of tax. So you can see it, charge of tax here. So under the charge of tax, we have the requirement of to file CIT. So it says subject to provision of this act, the tax shall for each year of assessment be payable at the rate specified under section 40 subsection 1 of this act. No, so sometimes inside these sections, you have another section referring to another section and then another section referring to another section. So it happens like that. And that is why you need to understand this tax law itself. You have to understand how to read this tax law. So if you have section 9 talks about charge of tax, if I talk about section 27, talks about allowable deductible disallowed expenses rather. So if you look at it, yeah, section 27 talks about disallowed expenses. Section 40 talks about right taxes, right? How to charge your tax, rate of tax. So section 40 here. So like that, you can easily by the time you start working with them, don't worry, during the course of this session, many of us would have known by the end of this training, most of you would have known the relevant section that you need to know when it pertains to preparing your CIT computation. So quickly, we've talked about how to read your tax law. So just pick it again. For example, you want to know what how do you tax insurance companies? So you go to section 16, you see the breakdown there. Let's take, for example, you want to know the profits exempt from CIT, the profit that you not tax under CIT. Go to section 23. You can easily go there, scroll down to section 23. Then it tells you, okay, these are the profits exempt. Say there shall be exempt from tax the profit of a company being a statutory or register friendly society, insofar as such profit are not derived from a trade or business carried on by such society. So when you have registered friendly societies, such as all those people that call themselves maybe a club, right? Let's say Ikoyi Club, for example. We have some other registered friendly society like that. So those kind of categories of people are not expected to tax their profit, right? So profit are exempt from GIT from tax purpose. We also have profit of any cooperative society registered under. So we have different definitions. Profit of any company engaged in ecclesiastical, charitable, or educational activities. So this is that part of the section that exempts organizations such as church, right? Churches, schools from subjecting their income to taxes, right? This is that part of the tax law that talks about it. So you see, by the time you understand some of these concepts, you know why we do what we are doing sometimes when it comes to tax computation. So let me just quickly go back to my presentation. Legal and regulatory framework. So we've talked about the Company Income Tax Act, talked about the FIRS Establishment Act, talked about the taxable entities, taxable profit. Now we'll be moving to the next, which is the rate of tax for CIT in Nigeria. So the rate of tax for CIT in Nigeria. So I think somebody is on mute. Just a minute, maybe I can manage that. Okay, okay, the person is just a minute. All right. So I'll be sharing my screen now again. So the rate of tax, please let me know once you can see it. Okay, I think it's showing that you can see it now. So the rate of tax in Nigeria, Section 40 of CETA makes provision for rate of tax applicable. Um, Section 40 of CETA makes provision for the rate of tax applicable. So specifically, the company income tax is currently charging three thresholds in accordance with the company's turnover as follows. So small company, the criteria is that what is the definition of a small company according to the Company Income Tax Act, Section 40? It says that a company with turnover less than 25 million, they will be subject to 0%. Medium-sized company, a company with turnover between 25 million and 100 million, they will be subject to CIT at 20%. A company, large company, a company is a large company when the total income or revenue is between 100 million naira and above, then such company will be subject to company income tax at 30% rate. So this is also verifiable from the Company Income Tax Act, right? Like I mentioned, I think I will look for a better way to share my screen so that I won't have to be closing it and opening it. Okay. So if you come to the CIT Act now, section 40, just for you to verify what has been said, and then for you to also be double sure that whatever you know is very correct. So you go to section 40. So you can see that this act is in parts also. You have part one, which has been completely repealed. You have part two, which talks about imposition of tax and taxable and profit chargeable. You have part three, we talk about ascertainment of profits. Then we have part four, which talks about ascertainment of accessible profit. You have part five, ascertainment of taxable profit. Like that, we have different parts. Then we have the sections. So if you look at section 40, rates of tax. So we can go to section 40 now and just to reinforce our knowledge. Like I mentioned, today might be more of we solidifying our background, our knowledge regarding the company income tax, so that beyond just doing the calculation, which at the end of the day will become very simple for you, you need to also know the technical reasons why some items are being disallowed, why some items are being allowed, why a specific rate is being used for some companies, and then why we disallow some items also. So look at section 40 now. So I have to go down to this section 40. All right. So this is section 40. I hope everybody can see my screen. Okay. So rate of tax. Section 40, as this what we did, the reason why this thing is in red is because just for you to easily know the aspect that the Finance Act has changed, right? So the Finance Act made changes to some of the sections of the CIT Act, and that's why we're having some of them highlighted. So for rate of tax, as per section 40, it says there shall be levied and paid for each year of assessment in respect of total profit of every year, every company. Tax as follows in the case of a one small company, tax provided under section 23. So one of the funny thing about the tax law is that it keep referring you back to another section, maybe because it has already made reference to it in that section. So if you go to section 23, subsection 1, you will see where they mention that. So let's go there and just check. Section 23, subsection 25. 23, right? This is section 23 that we are on now. Then subsection 1, then O. So O should be O is there. Right? It said the profit of a small company irrelevant year of assessment, provided that such company shall without prejudice to the exemption, comply with the tax registration and tax return filing stipulated of this act and be subject to provision of as regards time of filing, penalties for breach of statutory duties, and all other provision of this act in all respects during the period which its profit are below the tax paying threshold. So, or they are dividend received from small companies in the manufacturing sector in the first 5 years of their operation. So, this has like simplified the definition, and this also brings some clarity to some people that ask questions that, okay, since my company is a small company, that is, our revenue is below 25 million naira threshold, right? Why do I still need to file my tax returns? Or they start asking questions. Oh, do I still need to submit my CIT returns? Do I still need to prepare my tax computation? The answer is yes. If your revenue is below 25 million naira threshold, right, and you are registered as a limited liability company, you are still expected to prepare your CIT returns. You are still expected to file your CIT returns at 0%. So you are not completely exempted from filing. It's just that you are going to be filing your CIT returns at 0% based on the clarity that was provided by the law. So moving on, we go back to section 40 again to understand the remaining aspects. So it says for small company, we've seen the guideline. For medium-sized company, it says that tax rate at 20 kobo for every naira. So 20 kobo for every naira, what does it mean when we say 20 kobo for every naira? The interpretation is that 20 over 100, since 100 naira, 100 kobo makes 1 naira. So that would be 20 over 100. So 20 divided by 100 will give us 20%. And that is why we have this part where we have the rate of tax to be 20%. 20%. And then we have the large company also, just as defined by the Company Income Tax Act. A company with revenue above 100 million naira, right, will be subject to CIT at 30%. CIT at 30%. I hope you are all following. Okay.
Yes.
All right. Thank you. Okay. So we'll move to the next session now. We can stop recording and then we'll move to the next section.